Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. And let's get into today's weekend action. I was very tired Thursday and Friday. I couldn't really do a video, I was too consumed with stuff. But we'll just recap everything in this weekend video. And that's one of the reasons I did the weekend is I didn't do a video on those 2 days. So I'm gonna remember to share my screen this time. And let's go into the markets. And so it's sharing. So let's get into what I normally start off. The economic data. We'll go with Thursday and durable goods orders. That was strong. That's 1%. Consensus is -1. GDP was at consensus. This isn't market moving, but it's also not. It's slow anemic growth, which would generally uh, show that there's no recession and durable goods orders ex transportation. I don't really initial jobless claims. I don't think they're anything market moving. Retail inventories, those were not growth, but the wholesale that really grew. So that was positive. Continuous jobless claims, I don't care. Now, in terms of core PCE, this was actually up more than expected. 3.7% instead of 3.6. Corporate profits, that is one thing, down 2.7%. And let's see, GDP, PCE, QOQ. And this is the one thing that was really disappointed. Pending home sales for Thursday down 2.1% on a month over month. Year over year, minus 6.6. Consensus for both was 2.5%, but it was a decrease. That shows that just what I said, prices are just too high. They need to fall. And that's what it will happen, but it's just not immediate because of the fixed mortgage. But the thing is, George Gammon said this on Rebel Capitalist, and he said it better. Everything else is variable, and the reason why there's such a lag time is, for example, food goes up. People have been able to supplement that by not eating out or trading down, like what Walmart said. So instead of going to Whole Foods, they go to Walmart. So people have been trading down and trading. So that's why there's a longer lag time than usual. Back in the day, if you had a mortgage and that was variable, you couldn't really trade out of a mortgage. But if your food prices have gone up, you can trade down in quality or trade down in brand. And that's why there's such a long lag time. Eventually people will realize they can't afford their homes. And another thing is with rent is that there's so many new things coming up. So some people they just move every year. So what they'll do is they'll find somewhere that gives 2 months free, and they'll just move every year. It's a pain in the butt, but do it. I do it. Uh, and then Friday's data, core PCE up 1%, same. Now this is strong. Personal income, which I don't believe. That's up 5%. Consensus was 4%, but it's what the data. I don't believe it. But personal spending's up 2%. That's below expectation. PCE, that's 0. So that is they say it's the Fed's and preferred 2.6. That's actually good inflation numbers. Look at Chicago PMI. That's another contraction, way above consensus, but 47 is a contraction. Consumer sentiment in Michigan, that's 68.2 above the consensus 65. Still not all that great, but you can see the data is very mixed. The last 2 days, very mixed. And just I'm going to do what happened over the week. Dow Jones, this is the 5 day. For the week, you can tell it's mixed data, nothing that will enable the Fed to really drop rates. So for the week, down 302 points. That's the Dow, and 0.77%. So that's not, I don't see a crash coming, but They're sort of stuck in a conundrum. They need lower rates and more stimulus to juice up the market, but it's an election year and they need net bad data. But the powers that be, they don't want 45 in, so they're gonna try to make the data look as strong as possible. Hopefully, 45 becomes 47, but we'll see. And then you look at for people who say the Dow doesn't matter, it's the S&P. Well, the S&P was down this week too, 0.31%, negative 17, and that's what is going to happen. So if you can look at it, and also if you look at GLD, it's hard to find the weekly. This is an interesting pair. On the week, it's down 0.27%. So gold did have a negative week. Uh, in the middle of the week, it really took a bottom, but on Thursday, I remember it just had a really strong day to bounce off and then just went side. And I think one of the reasons the equities and gold both sold off was if you look at it, this is the 10-year interest rate. This is going up. And you look at it middle of the week, that's when gold really sold off. There was a down. So interest rates, but you need a weak economy. But one thing we can tell is the data is very mixed and they can't hide the fact that there's struggling economy. And I just wanted to show you, and I think this will be more reflected in the data as time moves by, especially next year. What I'm actually worried about is after the disastrous debate performances, uh, I'm not really worried about number 45 getting in. I hope he gets in, but what they might do, the elites, is let him in and then pull the rug from under and destroy the economy and blame it on him and his supporters. And then they'll use that as an excuse to really, do bad things. But we'll see. Who knows what will happen? But let's get into more economics and data. That's more the focus on the channel. Uh, Look at this Walgreens. This just goes to show I said a bottom up crash. Walgreens to close significant number of underperforming stores, cuts profit for forecast. So we keep going. Walgreens on Thursday announced plans to close a significant number of underperforming stores across the US due to ongoing challenges with profitability and declining margins. Yeah, they can no longer just push the cost onto the consumer because the consumer is broke. Store closures are part of the see if I can part of the so I can highlight it. Part of the company's multi-year footprint optimization program. While Walgreens didn't specify how many of its more than 8,700 stores will be affected. Oh, a meaningful percent of underperforming locations would shutter. I'm not going to read it word by word because a lot of it they put words just to do there. They probably cut this article in half. Like here, company cut its 2024 profit cast forecast. I don't want to highlight like this shares drop 45 because people might think I think there's a market crash. I don't think that's going to happen, at least not yet. Look at this. We continue to face a difficult operating environment. Yeah, well, it is. When your customers are broke, it's hard to sell them stuff. Look at this. Persistent pressures on US consumer and the impact of recent marketplace dynamics have eroded pharmacy margins. Yeah, your consumers' wages are declining. I don't know what the stats don't say it's declining, but in reality, it's declining, and your costs are going up. So yeah, you have declining margins and declining sales. Sales at stores open for at least a year slipped 2.3% compared to a year ago with the corner. Yeah, they're running out of savings. They can no longer burn their savings, so they're cutting back on spending. That's what's happening. They now go to Walgreens and just buy what they need. They don't browse around the store and see if there's anything they like. So down from its previous estimate, adjusted earnings to be 2.80 or 2.95 $2.95 per share, down from its previous estimates of $3.20 or 3.35 per share. So as you can see, worse than expected consumer environment. I'll just hide it according. And Walgreens, that's just the general. That's like CVS, and it's a general store that Americans go with if you want toothbrushes, toothpaste, among other things. So this is not good news for the economy. So yeah. And then here's another one. H&M plunges 13% on doubts over full year margin target. And June sales outlook shares declined, reports smaller than expected increase in second quarter profits. Operating profits 7.1 billion Swedish kroner, below the 7.37 billion kroner expected. World's second largest retailer cast doubt over its June sales and full profit margins. So let's see. Let's go over. I'm gonna go look. I'm sort of speed reading. I got second quarter results were nevertheless above 4.7 billion Swedish kroner. Bad weather likely to dampen sales in June. Oh, I've definitely heard that one before. I remember in 2013 there was bad GDP numbers and they said that they blamed it on the weather. So let's see. So yeah, this is more global. Paris, Milan, Stockholm, New York, London, and Tokyo. I like to focus on the US because a lot of people want to sound smart and be like, "Oh, I'm a global macro guy." Like, uh, but and the reality is like if you're analyzing gold or you got to do the US. So anyway, H&M is struggling, and you can tell that is a very bad. Of course, my computer is slow. So let's see if we can get trying to get this, but if you look at this, Nike misses on quarterly revenue, and then Levi's. Let's see if I can get this. Sorry, my computer. Uh sorry, yeah, my computer's a little slow, so let me see if I can get. Oh, good. I can. So New York Post, look at this. Levi shares drop 15% after weakness in wholesale business sinks quarterly revenue. Levi's is a great brand. I like their jeans. I wear them personally. So they should not be struggling if the economic data is anywhere near what it says it is. So obviously, let's just see latest trends. Let's see. Don't want that. Good quarter. Let's see. Levi's has been grappling with choppy demand in its wholesale business as retailers remain cautious about restocking against the backdrop of consumers being careful with their spending. Yeah, they're more careful because if you don't have money, they're not going to spend. So there it is. Of course, they have all these stupid ads. Uh, Look at this. But wholesalers often bear the brunt of the certain costs like return products. Yeah, people probably because they don't have much money. If you have a 30-day return, they'll buy it, go out, and then return it. And then that way they can just get, pants for the event. They don't have to they don't have to buy it and then it returns right back into their account. They don't have to worry about spending money. They can look nice. If you have good return policies, company. People are gonna take advantage of that. So yeah, a lot of returns, which shows people don't have much money and they're probably buying stuff and then using them once or twice and then returning it, taking advantage of the term policies. Uh, so yeah, let's look at and then Nike, which is a mainstream brand. I mean, they did some wrong things marketing wise and embraced bad politics, so that probably is hurting their brand. But forecast surprise revenue fall as upstarts steal market share, stock dives, which if you look at it, that could be. But Thursday forecast surprise drops in 2025 hurt by now a lot of people tried to blame softness in China, which I don't doubt. But look at it, faltering demand for sneakers as consumers convert new brands. I don't buy that. Nike has so many deals with the MLB, NFL that they could easily. And look at this Air Jordan efforts to drive up more sales through direct consumer channel, mainly in North America, has been unsuccessful. Jordan is a big brand. Everyone talks about how great The Last Dance is. So that's one reason I don't buy this whole. It's just competition. It's the economy. A lot of people love Air Jordans, and Jordan even has his own cologne. I don't know if people still will get it, but and then Air Force One, which there used to be songs about him. Nelly sings about his Air Force Ones, Nelly the rapper. So it also is betting that the Olympics will help. Well, yeah, that's not going to happen. Most people have been so denationalized, the Olympics means nothing now. So yeah, that good luck with that. The numbers they've given for 2025 suggest that the company is in bit of trouble. And then here it is. In North America, this quarter we saw softer traffic in our factory stores, highlighting each highlighting increasing pressure being felt by the value customer. So there you go. Behind all the BS, you can see it right here. See, this is why I do these videos so I can translate in North America this quarter softer traffic. That means people didn't go out to buy Nike stuff because broke. They're broke. They don't have money to go shop at the Nike stores. And it's value customer. Value, that's another way of saying the customer doesn't have enough money to go shopping. They don't have enough money to go to the mall and be like, maybe do window shopping and then say, you know what, I actually like that. I want to get it. No, they don't have it. So the woo price conscious consumers, Nike said it'll offer refresh lineup of footwear for $100. Well, it's gonna be like the McDonald's value meal. How long is that gonna last us? How much longer they can they eat cost? So I don't doubt there's weak demand at international, but there's also, as I showed you, let's go up. Slower foot traffic, value customer. Look at those code words. Slower, it's North America that's also the problem. So yeah, and so it's the US consumer. So whatever you hear about, and they used to make fun of people about recessions. Well, it looks like it's here. Looks like the recession callers will have the last laugh. And the more thing is also 4th of July parties will cost almost $100 to host this year as consumers seeking value. Value consumers now. That's the new buzzword that they're doing. So value consumers. Instead of calling them broke consumers, they're going to call them value. And I don't. I'm not saying this in any negative thing. I'm just translating for you. Uh, I think we can easily make America a rich country again with the right policies. I'm not going to go over it. This is YouTube, and we don't. Not just YouTube, but it's just America. We don't have freedom of speech anymore. Uh, so when it comes to typical holidays, consumers are typically willing to spend. Overall, they're expecting to spend 9.4 billion on food alone this year. But if you look at it, inflation is still going up. So that means the price of things. 2023, 9.5 billion, 2024, 9.4 billion. So that means people are spending less on the 4th of July because they have less money. And they're buying less too. So as we know from shrinkflation, uh shrinkflation, this is coming up. So in here, even here, a barbecue index showed that a 10-person barbecue will cost Americans roughly $99, most on record, with key fixings such as beer, beef, soda, and lettuce making up nearly 2/3 of the overall cost. So there you go. So the costs are up on record, but this is all you need to know. But Americans, even though the costs are up, they're spending less. You want to know why these companies are having less? Their costs are up. Here it is, 2023, but they're spending less. So they're not making it up in more volume, or they can't pass the cost on to the consumer and keep the same margin. They have to eat that. So they're less marginal products, lower volume. That is a recipe for disaster. When you have to sell lower margin products but have less volume too. And this is why we're going to see bankruptcies. That's not so let's see. Grocery prices were up 1% year over year. Cost to dine out jumped 4%. I mean, it's probably more than that, honestly, but just going by the numbers, just showing that I'm right, that the costs are higher, but and you can see here the graph right here, 2024, 9.4 billion, 2023, 9.5 billion. So you can see they're spending less, but the costs are higher. So let's see. Look at that, ground beef costs 5.33 per pound, up 4.9. I thought inflation was only what's it called again? What, 2.6%? Uh so anyway, that's all I have for today. Uh Savvy consumers will be looking for deals. Sure. Let's so anyway, that's all I have to say. Is you can see inflation is hitting the consumers. And one of the things about inflation is one of the economics, it's always followed by deflation and a crash. And this is why I always say the Fed eventually will reverse course. And that's one reason they want to cut rates is they know the economy is bad. It's not because of anything doing with graphs or charts or dot plots. Is they know the economy's bad and they want to be able to cut rates, but inflation is much worse than they thought. So anyway, just remember the disclaimer, this is not financial advice, just my thoughts about the markets, the economy, everything going on. Hit that like button, subscribe if you already haven't, and I will see you next video.